fix my fucking computer.
Oh yeah, there we go. Finally.
Yeah,
What
finally got
happened? What was wrong with it?
bro, I don't know. I hard reset it and then it was like all black, and then like I reset it again. So far it's working good, but like all my everything's deleted, like all my files. So I'm like downloading Chrome right now.
Dang, that's annoying.
Yeah, I'm trying to get a Discord back right now.
Yeah.
But
All right, cool. I guess we can go ahead and get started. So, like I said, just a nice little small lesson. Go over a couple things. I have some stuff charted on TradingView. Go over, a little bit of tomorrow, and then of course we have the main lesson of today. Just some Google slides. I didn't want to, give you guys big school vibes, so just little slides put together. So let's go ahead and get started. So mainly it's going to be on getting better with just being in our positions as well as risk management. So next. So number one, just make sure when you're starting off as a beginner trader, or you're approaching the market with somewhat to little experience, start small when you're buying those contracts. So as a new trader, approaching the market with money you're not comfortable with is something that could be very dangerous and stressful. The more contracts you buy equals out to more money in your position, which will make your position more volatile, meaning profits will come in faster. But that also means that if your position isn't right, losses can come down faster as well. So that could be very dangerous whenever you're starting off, just as a beginner trader. I recommend just buying one contract, maybe even two or three, depending on your experience. But when you're starting off, just work with getting pretty comfortable and pretty experienced with just buying one contract and making money off one contract. And if you can do that, you're comfortable with that, go ahead and start buying two, start buying three, and you'll start to see a change in your trading, obviously, because profits will come in differently. But it takes time. Just make sure that you get comfortable as you move up, and just take your time in the market. It's not something you're gonna get rich overnight with, or something you're gonna get be a pro overnight with. So just take your time. It's no big deal. It happens. So next, number two, always have a plan before entering a position. And I know sometimes you're going to be taking an analyst alert or someone else alert, or you're just sharing trading ideas with your buddy, or if you're just going off of your own trade. So what I said here is, regardless of if you're taking an analyst signal or taking your own trade, always approach the position with a reasonable take profit plan and a stop loss plan. So when you're entering your position, obviously you're gonna know how much money you're putting into that position and how volatile it's going to become. So always make sure that you have a take profit plan, whether that's $10, $15, $5, etc., etc. And then same for a stop loss plan. Just depending on your position or how comfortable you feel, make sure you always have a pretty tight, reasonable stop loss. And if you can keep those tight stop losses and not stay in that position where you become down 10, 15, $20, as soon as you probably see red and you start to see it not going to according to your plan, just get out of that position and then approach your next trade, hopefully with a better mindset. But finishing off what I said, most of the time analysts will alert their exits or stop loss, but never solely rely on them when you're in a position, meaning don't always solely rely on their exits. Whenever you see profits, always be sure to take advantage of that, whether it's small profits or big profits. Just know that market isn't always going to always be your friend. So, oh wait, whoa. So next, number three, always be aware of the capital that you have to trade with. And kind of when I say that, don't always full port your trades. The money that you're trading with, so don't put more than half of what you have or 75% into a trade. That's just not the best idea, because worst case scenario, if that trade goes bad, you're not just losing money, but you're screwing over your portfolio, and that's not what you want. So like I always say, keep those tight stop losses. All traders are going to approach the market funding their account with different prices. Everyone's different when they start off trading, and we all have different financial situations. So when learning as a trader, start small. Starting small will be your key utility at first. Just like I said earlier, buy one contract or buy contracts that are out of the money that just work better for your trading buying power. And as you start small and continue with those lighter contracts, you'll build your confidence and experience to slowly start growing and approaching the market differently and approaching your trades and contracts differently. So I'm going to switch over to TradingView, get out of this Google Slides. I have a couple more slides to show you though. But let me see. So I wanted to show you guys a little example of it's kind of basically support and resistance, but it also comes in key when I was talking about just always having a plan and knowing what you're doing with your position when you're in it. So this first blue line, or I think it was around here. Yeah, so I'm going to zoom in here. So say right here at this blue line that you entered calls because you saw that your stock was being bullish. We were in an uptrend here. You could have charted an uptrend with a trend line here. You saw that price was above SMA. So you entered calls right here. And you're like, okay, I have, my take profit plan, whatever it may be. I have my stop loss plan. So you entered calls right here and you're like, damn, like the market just wasn't my friend whatsoever. You saw that we started breaking down. You're like, okay, my stop loss is going to come in key here, but I'm going to see if we break this key support level. And this key support level is this blue line that I've charted out. So you're like, okay, if we break this key support level, I'm going to get out of this position. This is basically going to be my stop loss, and I'm going to exit out. So you can see we bought calls up here. We started to break down, and we're coming up to this support level. You're like, okay, hopefully we reject off this support and bounce back up to see a pump so I can start seeing my calls position being green. So we came up to that support. We rejected it. And I still stayed in that position even though my stop loss was probably broken because we entered over here and then we had a pretty significant drop. But the last thing you were waiting for, the last confirmation that you wanted, was us breaking that support. We bounced off of it. You can see that we slowly just kind of pumped up, had some consolidation, and usually when we have consolidation after a certain uptrend, we're going to continue that uptrend after that consolidation. So we came and you're like, okay, we're close to this resistance. Price is starting to go back up. We broke through that resistance and then just continued to keep on making new highs after entering right here and dealing with all this BS. So we broke through that, started making new highs, started showing off pretty strong momentum, and then you exited all the way up here at the end of the day and took profits. So that would have been a beautiful position, beautiful calls. That just, like I said, would have been a beautiful position after staying confident in this type of drop right here. You can see that we, even after entering calls at somewhat of a high, we broke through SMA, even broke through VWAP, but you stayed confident in that position and waited to see if we broke through that key support, and then which we didn't, we bounced off of it and then continued to just make new highs, which we did here, and then you probably would have banked off those calls. So that's basically an example of just having a plan or knowing what you're doing when you're in a position. The last thing that you want to do when you're entering a position is not having any type of take profit, stop loss goal, or looking at key levels. Like I say, key levels are always super important, and key levels are basically just support and resistance, which I trade off of a lot. That's basically the main thing I use to trade off of, support and resistance. So yeah, I'm gonna finish this off. I believe we finished 3. Number 4, always take profits. Always know that the market is not going to be your friend. I say this all the time, and I tell myself this all the time. Always feel free to take profits, whether they're small or big. Price is never going to constantly go up or constantly go down. So know when you see green in your position, be sure to take advantage of it. Don't get too greedy expecting something non-reasonable. Don't expect non-reasonable profits, especially if you're entering into only one or two contracts and you're expecting like hundreds out of it. Just don't get greedy, like I say. Just start small and work your way up. Just work your experience and confidence up. And as you do that, you'll feel more comfortable in entering into those bigger positions and, kind of having more of an idea of what you're doing in those positions and why you're entering into them. So don't get too greedy. Just take those profits, whether they're small. Small piles make big piles. So those $10 trades, $15, $20, $30 trades, even though they don't seem big to you, if you can constantly do that on the daily or just throughout the week and get more winning trades than losing trades, you'll start to see a significant difference in your trading. So number 5, like we kind of went over when I switched to TradingView, confirm key levels while you're trading. Support and resistance is one of my favorite things to use. Basically, it's kind of somewhat the same as supply and demand, but I really just use support and resistance levels more. So basically what I put here, support and resistance and other key indicators are what you want to focus on when you enter a position. Why is it switching? Or when are you doing this to me? Key levels can give you a better idea of prices we're supposed to be trading within and shows you important breakout levels that can lead you to maximizing your profits or even taking losses at an appropriate range or level. And even if your position breaks your stop loss, worst case scenario, wait for a certain level or indicator break. Like I kind of showed you earlier, say you're in that position and your stop loss breaks, wait for at least another confirmation of some type of indicator or support or resistance break. So that's kind of what I wanted to show you guys on TradingView. Always be sure to look at those key levels because that's really important. Number 6, I think this is the last one. Yeah. So basically, that was it. Just something small, something light. Let's just put all our ideas and work to the test, and just make shit happen. You guys already know. So I don't want to make the slides too big, but do you guys have any questions? Any questions? Please feel free to ask. I can go over a little bit of tomorrow as well.
Yeah, go over tomorrow. What you think?
Yeah. Sathu, yeah. So basically, mainly the most times the most important times when I'm trading are just throughout, or actually it's mainly at market open is my main trading times. That's usually where I'm comfortable trading there at market open, around market open. It's just basically where I use my strategy. So when it comes to signals, if you are interested in stuff like that, you should definitely check out Diamond. There are about 5 analysts in Diamond, which give you a variety of different signals of shares, options, stuff like that. But when it comes to me, myself, I like to just focus on one stock specifically, or not just one, but I like to have a nice little family of stocks in my watch list, mainly being SPY. So I usually just trade the S&P 500, which is SPY. I like the volatility in it. I like the different amount of contracts that it has to offer with the options. And, I just like the way it trades. Sometimes it could be really, really choppy and it could be really annoying to trade, but it actually tracks the whole market as well. If you aren't aware of SPY, SPY tracks a lot of the bigger companies in the market. So yeah, it's basically when I'm trading SPY, it's kind of like I'm trading a lot of the market. It moves a lot of the bigger stocks, not even just the big ones. It has small ones as well. But yeah, I definitely recommend checking out Diamond. Let me go over a bit of tomorrow. Let me check out futures. Oh wow. Okay, something crazy. Okay, so personally, with us beating inflation and CPI coming out, and honestly surprising a lot of people, we saw the market react pretty well to that. After we beat like expectations for inflation data, which is honestly really extremely solid. It just shows that it wasn't expectations beat anything like crazy, but even though we beat that, it just shows that somewhat of the market and some parts of the economy are kind of recovering. So I mean that's always good. Usually after days like this, I think what we were up like $20 on the day. Yeah, so I mean we might most likely see a little bit of recovery down. So tomorrow, but we could also pump to be honest, but I'm honestly looking to see us just chop down a little bit, go back down to somewhere in the 390s and we'll just go from there. Usually days after like days like these where we kind of just pump so much in pre-market and just regular market, days after we'll start to see a little bit of a recovery to the downside and you know just kind of have like a chill day. So we'll definitely see what happens. It'll be 0 day expiration contracts, which will be fun. Let me see. Let me end the recording for the lesson.